I see a cross-border being an area where stablecoins probably have a lot of potential, but cross-border is not, an area where public sector players cannot provide solutions.
All right, we have exactly 1 minute, so I'm gonna give everybody about 20 seconds for some final thoughts. Gordon?
Well, I think in understanding this whole ecosystem of decentralized finance, of blockchain, how it could support housing, we really should consider the opportunities to reduce risk through a market-based approach, in addition to the risks that are currently being considered.
Okay, Doug?
Agreed. I would add to that, reduce costs. One of the essential challenges for low income and first-time home buyers is the cost associated with the process. And so lots of potential to reduce costs.
Cindy?
A lot of potential, as Doug just mentioned, but also one thing that resonated with me from yesterday's panel is that the first question should be, who are you trying to serve? Then the next question will be, what is the right to solve the challenges that will help the customer reach their life goal or ambition?
Terrific. Well, thank you, Gordon. Thank you, Doug. Thank you, Cindy. It's so nice to talk to non-lawyers once in a while. Everybody have a great day. And again, Chris, you've done a great job this year, as always. Thank you, everybody. All right, waiting for my fellow panelists to come. This is quite a beauty pageant. I'm clearly not the most beautiful, but it's okay. So I'm Gary DeWall. I'm proud to be a trustee of IFM, which is one of the sponsors of this event. Again, like Chris, I'd like to thank Fannie Mae, Georgetown Law School, obviously, it's called the Institute of International Economics, and my panelists. So immediately I've got Gordon Miao, who's the lead emerging fintech. I'm sorry, he's the chief inaugural economist of Circle. Next to Gordon is Douglas Duncan, chief economist, senior vice president of Fannie Mae. And then last but not least, all the way down there is Cindy Lee, chief inaugural economist. I'm sorry, she's the lead emerging fintech, Fed Reserve, San Francisco. Particularly Gordon and Cindy both came from San Francisco, so that's great. So we're going to hop right into this event. And by the way, also thank IFM for this is their 5th year of co-sponsoring this event, so very excited about that. We're going to jump right into this with some macro issues. Let's start looking at crypto as a macro subject. The recent FSOC report basically criticized crypto, saying it's only out there for speculative purposes. Gordon, I know you're doing a new paper. You're thinking about this. What's your view of that topic?
I think that is quite a misleading view of even crypto today. If you think about payment stablecoin, for instance, which is what Circle issues, USDC, the primary use case is for payment transactions. And if you look at the challenges that we face today in the economy for instant payment, there is an immense need for faster, better, more programmable payment. The view that even for payment stablecoins are being used for speculative activities while that might be true, but let's think about the benchmark here. Any traditional payment system, over the vast majority of payment transactions occurring are for financial purposes. For Fedwire, which processes over $1 quadrillion a year in volume, only 2% of it is actually GDP. For FX market, $6 trillion a day of transaction volume, roughly only 2% of that is transactions supporting trades in goods and services. So the right benchmark is not 100% of payment activities going through crypto having to be non-speculative. It's not even 50%. Rather, reaching something like 2% of activities being non-speculative, which I think we are getting there. We're not there yet, but if you look at the amount of transactions that are used for cross-border purposes, and the amount of transactions that are being used for Web3 payments and emerging commerce on the Web3 platforms, I think we're getting there really, really quickly. And let's remember the opportunities here for really making an impact in financial inclusion. For instance, FX remittance costs on average is around 6% according to the World Bank globally. In some corridors, it's as high as in the teens percentage-wise. Now, if you can shave out even just a couple of percentage points from these remittance costs, that could do quite a bit of good to those hundreds of millions of migrant workers, not only in the US, but globally. Now, I think also what the FSOC report misses is the incredible amount of opportunity to actually reduce risk in the financial system by unbundling payments from banking and by making credit intermediation services more market-based. Today, we're talking about housing. And as you know, mortgage is such a big, important part of supporting the housing market. But mortgages, we've seen the trend, and maybe Doug could speak more to this, has already been more commoditized, being more market-based driven rather than strictly being bank-based. I think the usage of distributed ledgers, the usage of tokenized cash, payment stablecoins, the usage of blockchain would only fasten that process of separating out payments from banking, and even within banking, separating out the credit component from the depository service component.
Let's give Cindy a few seconds to give her views on the subject.
Sure. So, Gordon, you made the point of stable coins and the DLT technologies potential in terms of reducing cost and faster settlement time, which I think is probably the driver that has underlined a lot of payment sector innovation, including stable coins. But looking at this event, we are heading this event in September of 2022, and this has been a pretty testing year, arguably for many of the players in the fintech and crypto industry. So we still need to look at financial stability issues and looking at the recent market turbulence and look at what those new data points given. Obviously, there are a lot of moving pieces, and there are a lot of new data points for us to look at when we look at the recent, for example, we talk about when we prepare for this call about the Luna Terra collapse, right? So what is the right takeaway from this, and how do we look at vulnerability? Some of this failure of stablecoin projects, they happened in the past. It's just the recent 2 years or 3 years of a rising interest and activities that really recenter, attention of regulators and media into their behavior. So we now learn a little bit more about how stablecoins can behave. I think that new understanding, new data points, new renewed concerns on potential vulnerability, that's underlining a lot of ongoing policy debate and actually in the financial industry as well.
Cindy, well, I've got you here and we're talking about macro topics. I'm curious whether you have looked at correlations between cryptos generally and how they're behaving in this inflationary environment and this potential recessionary environment.
I have indeed. And actually, there have been a growing body of research by IMF economists and other economists that has well established that the correlation between Bitcoins and digital assets and major stock market indices has been on the rise. So going back to 2017, if you are looking at the correlation between Bitcoin price and S&P 500, for example, that was pretty close to zero. Today, it has really increased to the level of 0.5, 0.6 territory. So which put it very close with the traditional financial assets. So looking back at the previous recessions and period of financial distress, that's exactly how different asset classes, including commodities and bonds, have behaved. So it looks like digital assets, just based upon recent data, start to behave more like traditional risky assets in the financial markets.
Yeah. All right. And Doug, I'm curious. Let's go down a little bit to micro. We might go back up to macro again, but let's talk about DLT and crypto in the housing industry. What's the impact and the potential impact, might I add?
Well, I think that the essential question for households starts with industry discussion about title insurance. That's typically the place that most people go. They say there's a lot to be saved because of the fees in the title insurance space. That may be true over time, but there's like three things that have to happen. One is you have to be able to perfect ownership, right? And so this is Doug's personal view. This is not Fannie Mae's view. I think you'd have to, in the title insurance space, you'd have to have the Supreme Court say, as of date certain, all prior claims are extinguished. Now you have perfected ownership of that title in that time period. Then you have to be able to track encumbrances. So, for example, if you have a title, somebody can place a lien on that. You would have to track the placement of the lien and the extinguishment of that lien. And then you'd have to monitor any complexities that go along with that. Now I've just picked on the title insurance space because that's typically the first place people go when they talk about that.
Well, yeah, so just stop right there.
Yeah.
Why though, because you're introducing DLT to keep track of these things, you have to wipe out the past? I mean, isn't the past a problem every time you grant new insurance or have a title transfer?
Potentially, that's true. It would certainly make it easier, though, if you knew with certainty. You would reduce the risk related to that asset if you knew with certainty that you could track its entire time.
Sure, but you could also say, as of this date, we know it's 100% correct, but it's maybe built on a foundation this week.
Right. Yeah, I think it's about reducing the risk related to that asset. I think for households in the mortgage space, let me give you a personal example. It's a very complex process. I closed a loan about a year ago, and at the closing table, there was an $8,400 error in the arithmetic related to that. So,
in your favor or against you?
Against my favor, yeah. And so we got that corrected. There was some tense moments at the closing table while that was corrected. Particularly for unbanked people or low-income people who don't execute on those transactions frequently. I'm in the business, so I knew how to walk through that stack of paperwork, which is still this big. In order to get to that, I think that represents an opportunity for technology in the housing space to reduce that packet of things that you have to read and understand. Thinking about the unbanked, I think the most important thing for them is whatever currency is used, whether there's a central bank digital currency or whatever, it has to be legal tender. Because they typically, those unbanked folks and lower income folks typically have fewer assets, fewer savings, so the certainty around that is a real important issue. Second, low transaction costs. Gordon talked about the transaction costs of remittances. That seems to be a place that could be attacked successfully by technology and digitization. Liquidity.
Well, hold on a second. Let's just stop there. In our prep session, Gordon, you were mentioning that in fact transaction fees the argument around transaction fees may be somewhat misleading. That even today, the check payment agencies are actually quite popular, despite the fact that people have viable alternatives. Maybe just
That's
quick
right.
second on that.
So even today, many users, I think 75% of users of payday lenders actually do have bank accounts. The problem is they prefer to use payday lending for the faster transaction, for the more immediacy. So part of what Circle is trying to solve is the immediate payment, instantaneous payment. The other part is about programmability, which is how can you provide services such as simple as an escrow service, the simplest smart contract you could buy in Solidity, that is serve the broader public for uses such as closing a home.
Oh, sorry, Don.
No, that's great.
Go ahead.
That was one of the things that these liquidity, which the payday lenders provide sort of instantaneously, is one of those key things. You talked about stable coin and stable values. That's something I think that's very important to low-income households who have less resources totally. So being able to retain the value of those, very key to them. And then ease of understanding. It's not hard to understand what happens at a payday lender in that transaction. Easy to deal with. No piles of paperwork.
And Doug, you brought up a couple of good points about legal tender. It is important for payment stablecoin to have immediate convertibility to fiat currency, which is, for instance, USDC is convertible 24/7 with a lot of liquidity to fiat, which I think is definitely important for that seamless transaction to occur if you require to, say, pay fiat currency. In addition, I think you brought up the point about access. Here's where wallet-based systems could actually make huge improvements. For instance, 75% of USDC-enabled wallets hold less than $100, which is less than the minimum required amount for most banks. These are the areas I personally think there could be immense progress in terms of financial inclusion, in terms of supporting even housing.
I'm curious, because I think about the subject conceptually. I think about this great distributed ledger where you can use interplay of smart contracts, where you can potentially grant mortgages. You can collect through payments on the ledger. Your accounting is easy to follow. You've got this immutable record. Why aren't those all pluses that just make Fannie Mae or other agencies just not want to run out and somehow figure out how to get the mortgage process on blockchains?
The mortgage industry is not known for innovation.
I've heard that.
The e-mortgage has been a concept as long as I've been involved in the industry, which I'm not going to say how many years that is, but it's a lot. It just has never gotten traction all the way across the industry. Lots of relationship management issues, still significant parts of doing business in the mortgage industry. There's not, I don't believe, other than the regulatory compliance issues that have to be managed, there's not a conceptual reason that shouldn't happen. But there are, I think there's north of 25 regulations that impact mortgage processes. And coming out of the 2007 to 9 crisis, we surveyed lenders and asked them, where are you investing in technology? And it was all in compliance. When in theory, from our perspective, it should be improving efficiency and passing on savings to consumers. At that time, it was regulatory compliance. We have another study coming out probably next week or so on what they're doing now to try to.
But is it, Cynthia, I see you trying to say something, so go ahead, jump in.
I have a question because this is fascinating. So in terms of those compliance, challenges, are those about data privacy? Are those about, preserving trust within the mortgage process? What are those?
It's a whole range of things. And basically, it has been taking the compliance measurement and verification from paper documents to electronic documents. So in terms of cost savings, not a whole lot of cost savings. In fact, in the early period of changes, employees who were applying technology to substitute for paper were actually making paper copies and storing them in file cabinets. There's been progress on that, obviously, but much to go.
And Gordon, you had mentioned, one of the interesting aspects of blockchain, distributed ledger, crypto, is that it's actually a mitigant against the too big to fail potential of big banks. I mean, isn't that, again, part of the potential of the blockchain being a competition and not only driving, efficiency on blockchain, but driving efficiency at traditional banking institutions?
Absolutely. We're all seeing what happened during the great financial crisis, which, obviously was led by banks that are too big to fail, that some of them did have to get bailed out. And I think there's real opportunity here by unbundling banking. And part of that includes finding market-based approach that are built on blockchain, perhaps, to support important credit intermediation activities, such as mortgage. I think with the transparency that it offers, with the verifiability that blockchain offers, we could actually get to support mortgage if there's proper regulatory guardrails around it and clarities around it.
And Cindy, I'm curious, to the extent that there are potentials in this area, is it on permission blockchains, or is there a possibility it could be on permissionless blockchains?
So I think, let's say plain vanilla, public permissionless blockchains. We all know, Ethereum, Solana as a base layer token that has supported a lot of DeFi projects. Maybe some that Gordon you have referred to in the DeFi world that would introduce some of this decentralized benefit. It has their own utilities. But to the extent that these projects will need to touch upon traditional financial system and traditional financial institutions, so players like a mortgage lender and banks, I think the inevitable question is that how do you manage all sorts of risk? How do you be compliant? How do you manage, IT, cyber, all these challenges? So to that extent, I think there is a clear advantage of permissioned public blockchain or private blockchain to solve some of those challenges. But I see, Gordon, you have a reaction.
Well, let me clarify. I think there's a differentiation between permission versus permissionless versus getting KYC and getting compliant from a KYC and AML perspective. I think you could have KYC and AML compliance in a permissionless blockchain. So look, for instance, Circle launched Variety, which is a decentralized identity verification system that allows you to bring identity information to on-chain. If you look at companies that are doing data analytics, TRM Labs of the world, they're doing immense amount of tracing and tracking with great amount of information for AML compliance. So I think the concept of you have to be permissioned to be able to be compliant, I think that's it's not an equivalence. Those two are separate. And I come back to always asking this question rhetorically, which is, what is the use of a Gmail if you can only email other people with Gmail accounts? Which is the same fundamental reason why I think a permissionless blockchain, but with proper guided rails, with proper KYC, could actually do quite a bit of good in the world.
Doug, how is Fannie Mae formally thinking about using blockchain technology?
We've run a couple of experiments on it just to prove out the concept. We looked at some securities issues. At this point, it doesn't seem that the cost effectiveness is there yet, but the technologic capability exists. It's something that we'll continue to work on. We also have a working group that's looking at central bank digital currency to try to understand how that might impact the operations of the company, where in our processes or in the product space that might have an impact. So, yeah, we're trying to participate in the market development.
And I'm curious, Gordon, from your perspective, and I know you have a personal interest in this, Central bank digital currency, is there a place for both central bank digital currency and privately issued stablecoins going forward?
Absolutely. I think there could be coexistence between the two. Well, if you think about CBDC, there are different types of considerations. I think retail CBDC.
By the way, Cindy is smiling when you're talking right now, so we're going to get to her. Finish your thought, and then we're going to ask you why you're smiling.
I think she's smiling.
Yeah. Retail CBDC would just be too much of a lift for government to bet on multi-decade type of technology, which is why for private sector to innovate on constantly upgradable blockchain is probably more preferable. But yeah, if wholesale CBDC comes around, maybe there could be coexistence. But what is wholesale CBDC? A CBDC just means that somebody has direct liability of the Federal Reserve, in which case we already have that sort of system with Fed now, except it's only restricted to banks. So if you can open up access to the Fed balance sheet by non-banks, perhaps coupled with Fed now, that would essentially resemble a wholesale CBDC that could actually support more private sector-led efforts, such as payment stablecoins.
Cindy, some thoughts?
So the only point I'm going to make is that, again, we're in a place where innovations are happening constantly, not just in the private sector, but also by public sector players. So a lot matters. I mean, Gordon, you mentioned previously about, innovations of public permissionless blockchain can that use be for the purpose of identity verification. I'm sure there will be, a need for that. I'm sure there will be developers and builders who are thinking about some of these solutions, which just for me as someone who has followed crypto, not for too long, but I see that has been a very interesting part of the crypto asset ecosystem. So timing matters, a lot of moving pieces, which will eventually change our view on the desirability and also how we really envision this ecosystem with the different solutions coexist.
And I know in your unofficial, non-personal capacity, can CBDCs and private issue stablecoins coexist?
For that, I have a question mark. Because I see a cross-border being an area where stablecoins probably have a lot of potential, but cross-border is not, an area where public sector players cannot provide solutions.
All right, we have exactly 1 minute, so I'm going to give everybody about 20 seconds for some final thoughts. Gordon?
Well, I think in understanding this whole ecosystem of decentralized finance, of blockchain, and how it could support housing, we really should consider the opportunities to reduce risk through a market-based approach, in addition to the risks that are currently being considered.
Okay, Doug?
Agreed. I would add to that reduce costs. One of the essential challenges for low income and first-time home buyers is the cost associated with the process. And so lots of potential to reduce costs.
Cindy?
A lot of potential, as Doug just mentioned, but also one thing that resonated with me from yesterday's panel is that the first question should be, who are you trying to serve? Then the next question will be, what is the right to solve the challenges that will help the customer reach their life goal or ambition?
Terrific. Well, thank you, Gordon. Thank you, Doug. Thank you, Cindy. It's so nice to talk to non-lawyers once in a while. Everybody have a great day. And again, Chris, you've done a great job this year, as always. Thank you, everybody.